As many of us know by now, Beyond Meat has had an incredible run in the last couple of weeks, going up almost 50% or at one point over 50% in the stock price. Now, if this is related to it being a new meme stock or not, we don't know. If it has to do with WallStreetBets or if it's actually a fair value of the stock. That's what we're going to talk about. And does that mean that it's going to fall down in price soon, or that it could actually become higher with time? Well, that's what we're going to talk about here on the PlantStock channel today. If you're new to the channel, my name is Jesse and welcome. If you're not new, then welcome back. As always, I would truly appreciate an early thumbs up, since it does help spread the video to a lot more people out there, and that's what YouTube is all about, as we know. And if you haven't subscribed to this channel yet and you want to keep getting more information regarding Beyond Meat, Tattooed Chef, Oatly, or other plant stocks out there, make sure to subscribe and don't forget that magic bell button. Thank you, folks. I truly appreciate your help. So if we take a look at the stock chart, ticker symbol BYND, it is trading right now at about $147, down around 1.5%, and the stock market has been open about an hour. But if we take a look at the last month or so, it has spiked up quite well and it is sitting pretty at the moment. We talked about him before, Luke Lango from Investor Place, who is quite bullish on the company. He came out a couple of days ago with a really good article. Talks about the future will be plant-based and Beyond Meat will lead the way. And I think a lot of us know that's going to be the truth. He does warn us here, though, that if it is that it has become a meme stock or not, as we know, it shot up. It says here 35% in the past month. It actually shot up way more than that. Should you be worried then that it could go down again? Yes, traditionally, as we know, as he mentions here, normally when a stock has become really popular, it's been hyped, meme stock or not, it's going to pull back naturally, especially with a company, I think, like Beyond Meat, since we know it usually has a short that's about 30%. But the question I'm going to ask myself is that if it is that WallStreetBets was partly behind this stock movement going up, are they actually finished with it now? We don't know, actually, because we know with other stocks that they have gotten interested in that they would push it up quite far for a while. Then they might take a break from it and the stock comes down, but then they come back and push it up even more. So how do we know that they're finished with this one? I would say at the moment, we really don't know, but time will tell. Maybe they're barely begun. Folks, let me know down in the comments. What do you believe? But obviously, as he states, if it does start to pull back again, which there is obviously a chance that it will, obviously buy the dip. Because even though that it's been a hype stock now, it is one of those stocks that the fundamentals really looks good anyhow. And he mentions something that we've talked about often on this channel too, is that when it comes to people buying plant-based food, especially when it comes to Beyond Meat, a lot of them aren't actually vegans. As it states here, in fact, in 2019, research showed that roughly 90% of Americans partaking in the consumption of non-meat substitutes, like Beyond Meat, were not vegetarian or vegan. If only 10% of Americans are abstaining from non-meat consumption, then obviously the meatless market clearly has room to grow to meet demand. And as it also states, that doesn't even account for the global audience that is following this trend as well. So that means that more people are opening up to trying these alternatives, and the alternatives keeps getting better. And if it is one company keeps making their meat alternatives better and better, it is Beyond Meat, and there isn't any other company actually improving their products in the same way. And we know one of the reasons is that Beyond Meat keeps improving their product more and more is the amount of money they put on research. And as I stated so many times, Beyond Meat is kind of what Tesla is in the EV sector. It is the company that has the best tech, as it states here. It's the best brand. It has the most reach. So it's globally well known. There isn't any other company out there, as far as I know, that comes close to having the kind of global reach that the Beyond brand has. And again, any company that actually puts more R&D into their company than they do. So about 7 to 10%, and actually last quarter they put about 15% of their money into R&D. And if you compare it to other companies out there, other food companies, they don't even get close. Most are like 1% to 2%, and even the largest food companies out there, one of the largest, Tyson, puts about 0.2%. So they're not even close to putting the kind of amounts of money into their R&D to make the perfect product. And we know when it comes to Beyond, a lot of things are looking really good now, both near term and long term. As he states here that they're accelerating internationally, they're expanding into China, and they just partnered with KFC, both in China and apparently in California too. In California, it seems that later now in July, they're going to come out with their fake fried chicken fun as well. And obviously this is nothing. As we know, they have made an even larger deal with not only KFC, but with Yum Brands, who owns KFC, Pizza Hut, and Taco Bell. So that's on a global scale that they're going to start actually producing for in the next couple of months. And then we know the PepsiCo deal and the McDonald's deals. And also these deals are something that's going to start going on in the end of the year. So that's when the revenue will really start going. But one of the best things here, as they state here also, is that don't forget that now the restaurants are going to start opening up, which means that now when people are taking the vaccines, you're going to see a lot more people in restaurants all over the world, which means that they're going to get a whole other sales than they've had the last couple of years. Because don't forget, about a little over 50% or if around 50% of their sales is dependent on restaurants, the food service, right? So obviously when that was shut down for a year, that would really impact their overall revenue. And according to this analyst, he actually feels that you can expect an upside to about $200 in 2021, right? So it's around 140, 150 bucks now. You could expect another 25% according to him. And I actually looked at another analyst from the same place, Investor Place, who actually feels that the company stock should be worth around $224 at this very moment. And as I stated several times, I do find it funny that so many analysts out there, so many people, investors, have been negative about the Q1 report, right? Because yes, it looked bad when it came to the food service. They went down about 26% in the US and 44% on an international scale. Yet they went up in the stores about 28% and almost 200% internationally. So when these restaurants starts to opening up and they keep getting more revenues from that, then imagine adding that up with the different retails out there. That is probably also going to keep rising because let's face it, a lot of stores on an international scale, and Europe for sure keeps taking in their products, right? And we know that they added another 2,500 stores in Australia now recently, just a little over a week ago, which is called Coles. It's the second largest supermarket chain there. And as we know, recently they've added another 2,400 stores in Europe, in the UK, Austria, Switzerland, and Germany. So we're going to see it add up more and more. So within a half a year to a year, the revenue, considering that the restaurants are opening up, people are going to start going out to eat there, it's going to be totally different than what we've seen now the last half year to a year. So the question is, what kind of annual revenues can we see for this year? And I would say, as what I've seen so far, I would say at the very least 550 million from being at 400 now last year to 600. And who knows, it could actually be more. It all depends on what kind of executions they make now during that time. But if we take a look at Yahoo Finance and what their different analysts state, right? There's about 17 who has stated, first of all, what do we expect now in Q2? And actually the company themselves expected about 135 to 150 million, which is a huge difference from Q1, which was 108, right? And that's probably related to the fact that the more restaurants are going to open up. And they seem to be on board with what a lot of analysts believe, right? So it seems that the average is around 142 and the high estimate is 160, low is 134. So I think 135 140 to 150 seems reasonable, right? And then when we talk about the end of the year, it seems that the average estimates of about 19 analysts believe that it could be around 560 million. The high estimates is around 650 million. I don't think that is impossible. That seems fair to me. Low estimates around 523. So 550 to 600 seems definitely reasonable. And I think interesting to know also, what is the average? What do they believe in the end of 2022? And actually, it seems that the average is 850 million, looking pretty there. And the high estimate is 1.4 billion. We're going to, monitor that and talk more about that in the future. But definitely possibilities here. And now I would really like to know, folks, where do you see them now in the end of this year? Can you see them getting about 600 million or more? If it would be about 600 million, that would be about a 50% growth in revenue year over year. And I think that's at least very possible. Again, let me know down in the comments. What do you folks think? All right, folks, that was it for today. I truly hope you got some value from today's video. And if you did, make sure to help me out and smash that like button. And if you want to continue getting more information regarding Beyond Meat and other plant stocks out there, make sure to subscribe and don't forget that bell button. Thank you, folks. As always, truly appreciate your help. And as always, I do believe you know that I'm not a financial advisor. These are just my own thoughts and opinions. It's important to do your own due diligence and invest safe always. Hope to see you soon. Tomorrow, probably. Peace out.